Yes, yes, yes. I believe we are live here. Good afternoon, ladies and gentlemen. I'm Tyrion Hawkins here. I am the Passive Income Guru. Let me do a little housekeeping and make sure that I'm streaming live on both platforms, Facebook and YouTube. And today, guys, or this afternoon, we're going to talk about the criteria you need to get business funding. Okay, the criteria you need to meet in order to get business funding. So bear with me just for a second as I'm doing a little bit of housekeeping. If you're tuning in, please let me know where you're tuning in from, and I will be happy to connect with you. Okay. So give me just a second. I need to put a title here on Facebook so that everyone will know what this is about. So bear with me just for a second. Hope everyone is doing well today. Almost there. All right. Great, great, great. All right. So who's tuning in with me today? Where is everyone from? Who is on with me today? This is a very important topic, ladies and gentlemen, especially if you are in business or if you aspire to have or run a business. This is something, and I shared this yesterday. I want to continue to stress this. Business funding is something that is not taught in schools. Let me repeat that. Business funding, credit restoration, business credit building is not and will never be taught in the school systems. And you got to take a step back and ask why. Why don't they teach this information? Well, first of all, in school, what when you go to college, what do they want you to do after college? What is their number one goal for you after college? To work for someone else. If you get the education and the knowledge that you're able to get business funding, if you get the information needed to acquire business credit, that's going to put a threat in the corporate America world. Okay, you become, so to speak, your mindset after you get funding, and they know this, is to become an entrepreneur. What is an entrepreneur? An entrepreneur is someone who controls their own time. An entrepreneur solves problems. An entrepreneur invests in themselves. Okay, an entrepreneur understands that they will not and refuse to work for someone else's dreams. An entrepreneur is all about working for their dreams. In the school system, guys, is not designed for you to do that. So that's where I come in. I come in as the middleman. I'm the guy that's going to expose this information. Okay, I'm the guy that's going to tell you the truth, and I'm the guy that's going to put you in front of the information that is needed for you to make your dreams come true as an entrepreneur. Now, some of you probably love your job, and that's okay. We need certain people in the world to have jobs for this world to operate like it's supposed to operate. We need police officers, we need nurses, we need doctors, we need lawyers, we need certain people in office for this world to operate as smooth as it can. Okay, now on the flip side, there's a lot of people who despise their job. They're looking for something else. They want to be able to have their own dream, to invest in themselves. And this way, in this way, you can change the world financially. Okay, so let's get down to business. Oh, let me throw in there also. This is all about creating generational wealth. This is not about making someone else rich. This is about creating wealth for you and your family for many years to come. All right, so let me go ahead and share my screen, and let's get down to business. I'm going to show a presentation from the CEO of this company that I'm involved with called Novae, okay? Called Novae. And what he's going to do, some of you have probably already seen this website yesterday. I posted on my Facebook wall the other day about business funding, and I had a lot of comments, a lot of people inquiring, and people are still inquiring today. And if you went through the information, you landed on this site. And hopefully you had a chance to look at these criterias on how to get the business funding. If not, that's okay. If you didn't understand everything, that's what this video today is for. Rico, which is the CEO of Novae, the company's been around since 2014, debt-free company, ladies and gentlemen. One of the things that we specialize in, as you see here, is business funding. But not only that, we help you establish business credit, and we help you to restore your personal credit as well at the same time. That's the other spectrum of the equation. There's many other services on the inside. So this video is all geared toward breaking down the 7 funding categories, okay, that is going to help you get funding for any business that you so desire. And as you can see here, these are the 7 criteria right here. These are the sources that these are the criteria, or the categories, so to speak, that Rico is going to break down. Okay, so I want you guys to pay close attention to what he is about to say. Okay, this is actually a video that is pre-recorded, but he's going to break down to you these categories. Okay, and once he's done here, you're going to understand exactly what you need to do in order to start the process of getting funding, and what you need to work on. All right. Now, truth be told, we all need to work on something in our business. We all need to work on something when it comes to business credit, personal credit. There's always room for growth. There's always room to get better, right? That's what we strive for. We don't strive to stay in the same spot every single day. We strive to get better. And that's what it's all about. So we have something for every entrepreneur inside of this suite. Again, if your personal credit is great, you need to be working on your business credit, okay? If your personal credit is bad, you need to be working on both, right? Personal credit and your business credit. It's all going to make sense and benefit you in the long run. So without further ado, ladies and gentlemen, let me go ahead and get this video started. And at the end, you guys can go ahead and ask your questions. I'll answer them to the best of my ability. But again, pay attention to what he's about to say, because he's going to break everything down that you need to know about getting business funding. Okay? So sit back, relax, enjoy this presentation. I'll be back with you guys in just a sec.
Let's go ahead and jump into what we're here to talk about this evening. The business credit and funding page on your NovaeMoney.com affiliate websites. I'm not going to take a lot of time to talk about business credit. I'll do that on another Zoom training. But tonight we're here to talk about the business funding programs. For those of you who have issues with your personal credit, you definitely want to start building a business credit profile as you're working on your personal credit, because with that program, personal credit comes with that, in addition to the business credit, and also $50,000 guarantee when it comes to the business funding. So, you want to start doing it. Even if you have great personal credit, you still want to start working on your business credit profile right away. On this website, it gives you a synopsis of what the program is right here in this animation video. There's 7 steps we do go through to build your business credit. Over $11,000 in value for that product for a little less than $2,500 one time. Okay, personal credit, business credit, and a $50,000 funding guarantee. And this is a demo of the actual portal you get of the Novae Money Business Credit Finance Suite. So you want to watch that. It's about 7 or 8 minutes long. And, here's a video testimonial right here of a holistic doctor that we have that works with us. And we're actually helping him fund over $3 million in orders by going through our Business Credit Finance Suite program and through the funding program. So it's pretty exciting. So let's talk about our 7 funding categories. And then what we're going to do, is I'm going to expose everyone who's on tonight to a new document that you have on your training website, and we're actually going to go through that document. But I'm going to talk about these 7 categories really quickly, and I'm going to talk about them in a way where you can explain them to individuals who are actually looking for funding. Okay. Obviously, most people who are in business that want to expand their business, they understand that, you know, if they don't have the ability to do it with money that they already have, they're going to need somebody else's money. In fact, the vast majority of people who build wealth in the world when it comes to business and even investments, they use other people's money to be able to leverage it for a short period of time, or even some for a longer period of time. For example, companies that are publicly traded, they're actually growing their business with money that's invested into their company that's somebody else's, right? And then they get them a return based upon how the company performs. But at the end of the day, their bottom line is able to grow because of someone else's money. All right. There are many companies that go out here, and get loans, lines of credit, business credit cards, and put them in position to pretty much separate themselves from the competition. So don't let anyone ever tell you that, hey, the best way to build your business is bootstrapping, right? Or just use all your savings, shut down your 401k, pull all the money out. That's a very risky proposition. It's much better to have yourself in a good situation when it comes to your credit, to be able to leverage somebody else's money for the best interest rate possible. Then over the course of time, being able to pay that money back, but then you're able to make a sizable profit and continuing to grow your business over time, but also continuing to use other people's money, okay? So the 7 funding categories that we offer, and it says in all 50 states, it's important to understand as I go through some of these requirements right now, because of the economic climate that we're living in at this time, because of COVID-19 and what's happening with this global pandemic, at times there may be some challenges with individuals being able to qualify. There may be some programs that are suspended, not because there's an issue with Novae, but because in that particular state, okay, the program may be suspended because of what's going on. There are all kind of local laws, state laws, and sometimes even federal laws that may be changing today, next week, next month, or maybe lifted and, changing for the better, right? Because of what's going on right now. So it's important to be flexible during this time, not only obviously with the funding programs, but in other areas of your life. But what I can say, and that I'm happy to report at this point, is all of our funding programs, because of our additional relationships that we've been able to acquire over the past few weeks, are actually lending, okay? But at any time, because of the pandemic, some of those requirements could change. And that's why we have that right here on the website. Please note, due to the uncertain economic climate during COVID-19 pandemic, the requirements presented below may be adjusted at any time due to stricter lender requirements. If you have poor credit or little to no business revenue, consider one of our other programs prior to applying. So it's important to understand that all of the lenders, whether they're hard money lenders, whether they're traditional banks, whether it's a crowdfunding platform, even venture capitalists, everyone wants to limit their risk. They want to be able to limit their exposure. So it's important for you to understand the higher risk you are, the higher fees you're going to have to pay, okay? And it's important for you to write down, jot this down. If you're going to be a person who's involved in Novae, on the affiliate pro, because in order to get paid commissions from offering our funding, you have to be on the affiliate pro. Now, if you're watching this video right now and you're what we call a prospect, somebody who hasn't gotten involved in any of our programs yet, this is a training, okay? Now, I'm going to be explaining our lending programs, but I'm also going to be training our affiliates across the country how to be able to explain these programs. So this is not just a general presentation of these actual funding categories. However, you will learn more about them, so just stay tuned. But I also wanted to make a disclaimer to help you understand that this is also a training where we're training all of our affiliate pro members across the country how to be able to approach this when they're having conversations and telling people about what we offer. So if you're going to be somebody that wants to offer the funding, it's important that you understand the concept of funding and how it works, because obviously everyone, they want as much as they can get, but they got to understand that they have to have one of three things when they're coming to be able to apply for money. Not only with Novae, but any other company that's a broker or a direct lender or a bank, right? They got to be able to have credit, real estate with equity, okay, or business revenue. All right, so one of those three things, if they're gonna be able to get qualified, okay. In the banking industry, typically they call it the 3 C's: cash, collateral, and credit, right? You got to have those if you want to be able to succeed in business or in real estate: cash, collateral, or credit. But specifically speaking, if we're talking about applying for a loan or applying for a line of credit, okay, applying for any of these funding types, you got to have good credit, or you can have real estate with equity, or you can have business revenue. Okay, now if you got one of those three at a certain level, then more than likely we'll be able to get you some money. But if you have none of those three, it's not very likely that you're going to be able to get some money. Okay, so when you're talking to somebody and they need money to start a business, you got to ask them, do they or a business partner have good credit? Okay, now you say, well, Rico, good credit is relative. No, good credit is above a 700 credit score. That's what we call good credit when it comes to lending. If you're north of 700, depending on how robust your credit file is going to determine whether or not you're going to be able to get any money, and it's also going to determine how much money you're going to get. Now, I'm going to get more granular as we go along in this training and kind of tell you some more specifics, but that's kind of like the baseline. If they have below a 700 credit score, then we need to start looking at, okay, well, do you have any business revenues? How much money is your company earning? Now, notice I said company, not how much are they earning. And grow your company, you got to be able to start to establish a business bank account with consistent revenues coming in to be able to show the lenders or the broker or whoever you're dealing with to be able to get money. That's a part of business credibility. See, when you don't have these things, what happens you're considered a high risk. And the higher the risk, the higher your fees are going to be, but also the lower amount of money you're going to be able to qualify for. So the whole goal is to be able to decrease the risk associated with the application. Well, how do you decrease the risk? Well, to have the highest credit score possible. So if you're going to be looking for funding and you want to grow your company and you want to expand, you got to ask yourself, well, how can I start developing myself and my business to have the highest credit score possible? That's why we, deal with personal credit and business credit building, because we help individuals get the highest credit score possible. Because that's one of the things you need to be able to leverage money to grow your business, is you need good credit. The second thing I just talked about is real estate with equity. Now, obviously, if you own a home and you've owned a home for years and you have equity in that home, or somebody, left you a house that maybe has a lot of equity, you can actually get real estate. You can actually get business funding, okay, based on the equity that's in the house, even if you got a terrible credit score, okay. And even if you don't have that much business revenue, you still get a business loan based off of real estate equity, okay? The more equity you have, obviously, the less risk you become. The less equity you have, right, the more risk you become, okay? And remember, higher risk, higher fees, lower amount. The lower risk, then that's when you're going to get the lower fees and a higher amount that you're going to be able to qualify for. And lastly, business revenue. Now, higher your business revenues, 20,000, 50,000, 100,000 a month in revenue, boom, the higher the amount of money you're going to be able to get, whether that's going to be a line of credit or whether that's going to be a loan. All right, so we're going to talk about these 7 categories. Then I'm going to expose you to a new document, and which we have several documents on our site right now. We're going to button those up into like a little package over the course of the next week. But you all are going to be excited for those of you who are out here looking to actually offer the loan program. Let me put my little Facebook thing over here, split screen, so I can kind of see what's going on with Facebook if anybody has any questions, okay? All right, so let's go ahead and get into, let me see, what am I supposed to be showing? I think we're supposed to be on the website right now, okay. Funding program. So the first funding program we offer, startup unsecured business funding. As you can see, it says this funding can be used for any purpose. No income verification required. So that means, it doesn't matter how much money you're earning. It doesn't matter if you're self-employed, employed, it doesn't matter. Right? And it's a revolving line of credit. And you must have at least $2,000 in revolving credit currently. Well, what does that mean? We're talking about like on a credit card. You're saying, well, Rico, I have a 725 credit score, but I only have one credit card and my limit is $1,000. Let me help y'all understand something, okay? You have to have at least $2,000 in revolving credit. So let's say if you only got 1,000, and that means that the lenders are going to look at your credit profile and they're going to say, even though they have over a 700, since they only have $1,000 in revolving credit, and that means no other bank has been willing to extend them credit. So I don't want to be the first one, okay? So more than likely, even though you got over a 700, since you have less than $2,000 in revolving credit, they're not going to want to offer you any revolving credit in the form of unsecured business funding. So more than likely, you're not going to be able to be qualified. Let's just say you say, well, Rico, I got a 705 credit score, and I got $20,000 in revolving credit, but I got $15,000 in debt, okay? So that means you have high utilization. As you can see, it says right here that you got to have less than 30% utilization. So if you got 75% utilization, that's more than 2.5 times. That's 2.5 times what the requirement is. So that means even though you got over a 700, if your utilization is high, the lender is not going to approve you because they see you as too high of a risk. Okay? Let me blow this up a little bit so y'all can see it better. All right. So when we look at these requirements, it's important to understand that it's not one or two of the requirements, but you got to meet all of the minimums in order to be able to get approved. Sometimes if you're on the borderline, there's a possibility that we may be able to get it through. Sometimes. But I always say that you use this as a baseline to be able to figure out if you're going to be able to get approved or not. Minimum credit score, 700. Minimum time in business, it doesn't matter. Minimum monthly requirement, 0 in terms of the income, okay? Because it's a startup, up to $150,000 in revolving credit lines, okay? A startup small business loan, okay? Now, this is for people that want a loan outside of revolving lines of credit to be able to start their business. Now, understand this is a personal loan, even though you're going to be using it for business purposes. Well, Rico, why is it a personal loan if you're saying it's a business loan? Because they can't give you a loan for a business that is not established. See, with revolving credit, what we're going to do with the unsecured business funding is we're going to help you get access to business credit cards that are personally guaranteed by you, okay? Because your business hasn't done anything yet. But they're business cards, but they're personally guaranteed by you for the unsecured business funding. With business loans, you can't get a business loan with no history, with no business history, with no business revenues, with no business tax returns. So it's going to be a personal loan you're going to use for business purposes, okay? Unsecured loan, and it says it right there, personal loan, 37 years. You have to have W-2 verifiable income. Now, if it's not W-2, if you don't have a W-2, what they do is they look at your tax returns. Typically, it's 1 year. Right now, with everything going on, they probably want 2 years. Credit score still has to be above 700. Your DTI has to be below 40%. That's debt to income ratio. Okay? So that means that, if you make $1,000, okay, 1,000, and I'm just using this, just this round number, $1,000 in income, your debt payments per month can't exceed $400 because that's 40%. So you can use that calculation to see where that comes out at. Your monthly revenue for your business, or for your personal income, $4,000. So if you're earning at least $4,000 in personal income, you could potentially qualify for money. Now, you can't be earning $4,000 in income and qualify for $150,000. Obviously, $4,000 is the minimum. The more income you earn, the higher your credit score, the more money you're going to be able to get. Business cash advance, okay? Business cash advance. This is, the company is actually, the lenders are going to look at your business revenues, and they're going to gauge how much they're going to lend you against the amount of revenue that you earn on a monthly basis. All right, and some of these, are also based off of the credit card sales. We can look at your revenues and deposits you have coming in. It may not be credit card sales, and also strictly looking at your credit card sales. But the bottom line is you're going to be able to get anywhere from 25% up to 200% of your monthly deposits. Okay. Now, as you can see, there's no credit score minimum. So this is what we call revenue-based finance. Okay. Revenue-based finance. Now, you got to be in business at least 6 months. And right now, the minimum is $10,000. And they just gave us that probably last month. I just had somebody to get approved yesterday that was at $7,000 in business revenue on average for the last 3 months. And that's what they're looking at. The last 3 months, they're going to average what your monthly revenues were based on your bank statements. You know, if you're talking to somebody, they want to apply for business funding, you can't talk to them about business funding and then don't know if they have a business bank account, because they can't apply for business funding and send over screenshots of cash app receipts. That doesn't work, okay? They need to have a business bank account if they want business funding, unless they're trying to get startup funding, okay? They're trying to get startup because maybe they don't have a business bank account yet. But anything else, they're going to need business bank statements. All right, they can go up to $10 million. Business term loans. Okay, this is what we're talking about. SBA Express 7A equipment financing, franchise loans. You got to have at least a 620 for that. We also have some new programs where you can get some other term loans that'll take as low as a 500. I'm going to talk about that here shortly. All right, 6 months in business, but as you can see, you got to have revenue, right? It's $20,000, not per year, but per month, up to $5 million in funding we're giving out there. Business loan, business line of credit. You know, obviously with the business line of credit, you actually have, it's like a credit card, except it's attached to your bank account, and you can actually take draws for that to be deposited in your bank account. And then you're going to pay back every week or every month based on a certain term that's set up when you actually get the account. Again, the bottom right now is 620. The minimum credit score is 6 months in business, $20,000 a month minimum, revenue up to $250,000 that they're actually giving out right now on those lines of credit. Invoice factoring, you know, you're able to sell your accounts receivable to a lender at a discount. That means that if you have invoices to businesses or different clients, and let's say, for example, you're selling a product and you got $10,000 in invoices that's due to you within the next 90 days, but you need money right away. Maybe you get that $10,000 right away in the form of this invoice factoring, you know, but you'll actually have to pay the lender back $13,000. So they gave you 10, advancing you money on your invoices. So you sold them your invoices, so they're going to collect on the invoices, but you actually got to pay them back $13,000. Okay. Minimum credit score of 530, 3 months in business, $40,000 per month in revenue. And typically, especially during this time, they're stricter in terms of what type of businesses can get invoice factored. Lastly, real estate investment, commercial loans, everything you could think of. We're going to go through that here shortly because we have a new document out that's actually showing you everything that we do in real estate. You know, credit score, you know, typically around 600. Some of the programs, depending on your experience, depending on the property that you're looking at investing into, it can go down into the 500s in terms of getting qualified, and the loan amounts go up to $10 million. So let's look at a document that I think you all are going to find very, very helpful. Okay. If you go to NovaeMoneyTraining.com, click on the document section, there's a tab, there's a document that's called Novae 2020 Product Guide. Okay. If you click on the Novae 2020 Product Guide, you're going to be able to see a 38-page document that goes over all the programs that we have. All right. So what you want to do is print it out. You want to keep this with you just in case you're talking to somebody or have it on your phone, whatever the case may be. But it's very thorough. It kind of talks about all the different products that we offer. Let me see. Am I still on Facebook? Okay. All right. So you'll be able to see this on the website. It's live right now. And we're going to talk about the different types of programs and where you find everything. Okay, yeah, I'm still there. All right, let me put this at the top. Okay. All right, so we got page number, I guess it's number 3. So it starts, so I'm not going to go through my stack. So it starts talking about working capital, ACH loan. So that's just basically, going to your bank account then and taking out MSA merchant cash advance. So they tell you what these loans are, right? They describe the loans to you. What's the differences between the types of loans, all right? Then it talks about what you can use the funds for. Then it gives you the information, okay? The minimum amount up to the maximum amount. As you can see here, for these loans, the minimum starts at $3,500. They can get up to $2 million. Gives you the payback terms. Tells you how long it'll take to get approved with proper documentation. And we're going to talk about documentation as well. Talks about the payments, no personal collateral, funding in 1 to 3 days, all the minimum requirements. Now, this is one of our new lending partners. They have a much more robust portfolio of banks and lenders and crowdfunding partners. So this really gives us the ability, to have flexibility with what we're offering certain people when they're looking for funding. So that's why you want to go through this document and kind of learn what they're looking for. So the business loan, advanced consolidation, people that maybe have multiple loans and they want to consolidate them all into one. Explains the program to you. Tells you, approval amounts from $20,000 up to $2 million. All the other information. It says here personal or business collateral may be required for this type of loan. Minimum qualifications, so everything that they're going to need going into it in order for them to get qualified. Okay. Term loans, same thing here. It's going to tell you, give you an explanation of the program, give you some examples of interest rates, things of that nature. Going to talk about the range of money you can actually get them, $20,000 to $50,000 interest rates, how long it'll take them, the payment schedules they could be on, qualifications. As you can see for these term loans, 1+ year in business, 620 credit score, 20,000 minimum monthly revenue. So everything is there. All right. Then goes into inventory loan. If you got inventory, you can actually, there's value in that. You can actually get money based on inventory that you have. It explains everything right here for you. Okay, so if you're going to be talking to clients, obviously you can review this and translate that information to them. They will think you are a lending genius. Okay, so this information we have all there for you. Line of credit, the revolving line of credit, goes through how it works, how you can use the credit, what it is, is it a good fit for your business? It's giving you up to $250,000. It's telling you right now, hey, you must have been in business for 12+ months, 620 credit score, gross revenue. So it tells you all the qualifications. Invoice factor, same thing here. Goes into the 6 reasons why you would want to consider invoice factor. And even more information there. Equipment finance. A lot of people are actually really excited about this new element of our funding, because now we can provide equipment lease financing for both prime and subprime applicants. Okay, individuals who are out here in the commercial and industrial trucking and transport, commercial vehicles, people who are looking to purchase a franchise, healthcare, hospitality, merchant finance, technology and software. So they can get financed with this, and there are different tiers of programs based upon what their credit looks like. Okay, how long they've been in business, how much revenue they're earning. So all this is right here for you. A credit program, 5+ years in business, 620 credit score application, only available on equipment purchases up to $250,000. B credit program, 2+ years in business, 650 plus credit score. Applicant only available for purchases up to $150,000. So you know people who are trying to buy trucks, right? Well, guess what? There's an opportunity for them to be able to do that. You know, they want to buy their own truck. They want to buy 2 or 3 trucks. Well, they have an opportunity based on these programs to be able to make that happen. So a lot of people are excited about that. You know, and obviously that's going to be good for you if you are the person, the go-to person for credit and money. That's what we do. Somebody wants to know about Novae. Our core products are credit and money. You know, we inspire people to get more out of life. We educate them on ways to go about it. We provide opportunities to make it happen. Somebody says, "Oh, well, what do you sell? You know, what do you do?" Okay. Well, we're the one-stop shop for credit and money, personal credit, business credit, and also funding. And we do personal loans as well. You know, we have that on the website also. So it goes through the information and, of course, gets into the qualifications as well. And, you know, different advantages of leasing. So it's you kind of telling people, you know, what that looks like. Business factoring, you know, freight brokers, government contractors, oil and gas, staffing, you know, so you can read through all of this again, depending on what areas you want to focus on. I wouldn't say, you know, it's pretty difficult for you to be able to market multiple things at once. You know, what you should do is look at this platform and the ability you have to offer all these things and figure out 1 or 2 niches that you want to focus on, right? You know, figure out, you know, where you want to recruit. You know, if it's real estate investing and you want to focus on real estate investors, you want to focus on building relationships with real estate agents. You know, if it's truck drivers, obviously, you know, we got equipment finance and equipment leasing, focus on that, right? But focus on a few areas, 1 or 2, and then become an expert at that. You know, and if somebody's asking for something else, then you know we got it. But don't be trying to be an expert at everything, okay? Then, of course, we got the SBA loans, SBA 7A Express. You know, it talks about here who's eligible for that, the interest rates on, you know, on what they look like, 4.5% for loans above 50,000, 6.5% for loans above 50,000. You know, people ask those kind of questions, so it's great to have that information available here. The product information, it talks about that. Also, the qualifications, it talks about that. So you'll be able to know the information to give people, and they don't have to worry about setting up a consultation with us. You know, they don't have to worry about calling us. You'll be able to give them that information based on everything that you have in this document. Also, SBA commercial real estate loans. Okay, so you have the ability to be able to help somebody get 100% financing, you know, on a commercial real estate purchase, okay, or even refinance through these loans. You know, so it talks about here 25 fully amortizing term. You know, that means they're going to have low payments up to $5 million, variable interest rates, no loan maturities or balloons. So that's really good. A lot of tax savings. And it tells you how it works. Y'all got to understand this information is so good that you all could literally be doing like Zooms, you know, or Facebook Lives or Instagram Lives, just on short sections of what we're offering, just to educate them. And then you can say at the end, everything that I just educated you on, guess what? We do it. You know, we can actually service you. And again, you become an expert in that way, and that's how you're able to build your business, and even your personal brand is tied to us being a service and loan provider. Okay, so then it goes through qualifications, so you're able to break all those things down. I'm also telling you if they got this going on, then they're not going to be approved. You know, so that's important for them to know right away. You know, like if you're asking them, they won't know they want to get an SBA commercial loan. You say, well, do you got any tax liens? Do you have any bankruptcies? It's like two of the first questions you'll ask. Any tax liens, any bankruptcies? They say, no, you know, no tax liens, but I did file bankruptcy 2 years ago. Well, as you can see right here on this, the qualifications, it says, well, no bankruptcy or foreclosures in the last 3 years. So, you know, they will be ruled out, right? Startup capital, personal loan information. You know, we have several lenders on our personal loan platform. You know, so that's something that's already can be done. On the personal loan platform, obviously the commissions are very small and they're not the same as business funding. So there are no commissions for affiliates on personal loans, okay? So if you want commission, you want to maybe shift everybody over to the business funding. Okay, especially if they got businesses, that's the way they need to be going anyway, unless they're startups. But you still want them to get the UBF, which is the unsecured business funding, if they can't qualify for the startup business loan. All right, so that's the product guide. Okay, that's the product guide on the website. There are several documents, as you can see on my desk. I kind of got them spread out. We'll go back to that page so you can see them. Okay, fillable application right here. That's basically an application. You can send them the link. They can fill it out, sign it, send it to us, or you can print it out when you're meeting with them so they can fill out, get it signed, and you can email it to loans@novaemoney.com. Obviously, if you're trying to earn a commission and get volume off of them actually doing the application, you want to be able to go ahead and get it done through the website. I would recommend that you have them fill this out, and then you could actually take their payment and get everything done on the website. All right, so next, let's look at this. This is the asset-based secured loan products and high-risk equipment financing. So, you know, we talked about earlier the owner-operator trucker financing. I think everybody will be pretty excited to see more about this. If you're excited about knowing that you can offer people who you know, drive trucks, the ability to get money to buy trucks and lease trucks, just say I am in the comments so I can go back later. Just say I'm excited. You know, I am, right, excited about the trucker finance. Anybody out there talking to truckers and know truckers that want to buy their own truck, figure out a way to be able to buy multiple trucks. Okay, so now you have an option to be able to service them. Okay, high risk starter, owner operator truck finance. You also got high risk starter heavy equipment finance. Okay, real estate based financing, cash out financing, structured finance, working capital, all those things. Okay, so here it breaks it down even more. Trucks and trailers, high risk, so it's telling you what the ranges are and how much of the cost that they'll be willing to actually lend, and they'll break it down. Anywhere in these documents where you see what the commissions are, always remember that the affiliates earn 50% of whatever the commission is. So if you see these commissions associated with different parts of the document, you're actually earning 50% of whatever those commissions are. Okay. All right, so it goes more into it, the purchase financing, and it's giving you examples. And it's saying here, no minimum FICO score, startups okay, even a past bankruptcy is okay. All right, because what they're utilizing obviously as the collateral is the actual truck itself. All right, so that's important to understand, but it's giving you some examples here of you know, some different trucks, what those purchase prices are, the amount they were funded, what their down payment was, and what their monthly payment is. Okay, so this is something again that you could screenshot, send a picture to somebody who's looking to be able to get involved with trucking, or maybe they're already in and they're leasing somebody else's truck. They want to buy their own. You can tell them, hey, this is some examples of what we got going on. This is what you're going to need to be able to make it happen. All right. Heavy equipment financing. Again, same thing. If you know somebody who's in construction, they need some, you know, equipment, you know, now our particular lending partner can actually help them make that happen. High risk heavy equipment. You know, they have challenge credit startup programs. So all these things, what you're looking at now. You notice, I said earlier, most lending programs, you need the 3 C's outside of what I just told you in the beginning, right, for us. But the 3 C's are cash, credit, and collateral, right? So here, as you can see, that it says challenge credit startup program. So if your credit's challenged, and if you don't have any collateral, then you need cash, because they're saying they're going to finance 65% or whatever the amount you're trying to get financed. So in that particular example with this new Bobcat, it's a $52,000 purchase, but they're only going to finance 65% of that. So they're going to need to put down $18,200. Okay. Somebody would say, well, Rico, that doesn't make sense. If you had that much money, why would you want to do it in the first place? Because you ain't got $52,000. And by the way, if you had a Bobcat and you had some work, you'd probably make back all your money within like the next 3 or 4 months. And then you'll be in a profit after that moving forward. So it's important to understand how this whole thing works, and, you know, for you to be able to be excited about it. All right, so moving on, asset-based real estate. Again, you know, talking about the equity, it's in the property use of funds, you know, the term, the loan terms that they have right now, you know, and what that looks like, getting started, the requirements and fees. So everything down here is there for you to be able to tell them exactly what it looks like, what we're going to need, what we're going to submit to be able to get the ball rolling, you know, and how do we be able to make this happen effectively, okay? All right, capital tied up in real estate, let's put your equity to work. So it talks about cash out refinance, talks about debt consolidation, even give you some examples right here of what's going on. So I don't know if we can make it any easier for you. It's important to understand the reason why we're giving you all of this information is to make it easier for you. So we don't want you giving us more work. By now we're giving you more information, and now you're calling us asking us more questions because we're giving you all this, and all you got to do is read. Okay. So if you call into support and you start having questions about this, we're going to refer you to the document. Okay. That's the reason why we've made sure that this is so robust, so you'll be able to have the answers that you need. Also, structured finance and working capital, you know, up to $5 million. And again, it's going back and showing you with equity-based financing how much you can get and what's all required to make that happen. Structured finance, working capital, continue what the requirements are in terms of what you got to do when you're submitting it, you know, what the stipulations and terms look like. So all of that's already there for you. A commission schedule on the back end, and again, you get 50% of that. And you know how you submit the information, boom, everything is here. Okay. All right. So that's the high risk equipment finance and asset-based loans. All right. So that's that. Let's look at another document. Okay. All those are there. Boom, products and required documents. So all those different products we were talking about, this is the required documents document. Okay, so basically you're able to see what's required to be submitted in order to potentially get approved for one of those funding programs. Okay, so everything is here in this document. And again, you can download that from the site, and everything you need as far as documents are already on NovaeMoneyTraining.com in this section. Okay, because we actually added 12 more documents to this section today. One document's on here twice, so that's going to be taken off tomorrow. So it's really 11 new documents that's been added. So everything that you're going to see on this requirements page is actually at NovaeMoneyTraining.com that you need from us. Okay. So like, for example, how do I move this out of the way? Okay, there you go. So to purchase the investor property data worksheet, okay? As you can see, this is the data worksheet on the deal. Let's say the information we received from the data worksheet gives us, we'll blow this up a little bit so you can see it. Gives us the info needed to approve the property, pre-approve the investor, and provide a pre-approval or preliminary numbers for their review. If the investor wants to proceed after reviewing the preliminary numbers, we will send them a checklist of additional documents needed to secure an official hard approval. Once we have an official approval and the investor still wants to proceed, we will continue collecting required documents in order and schedule appraisal. All right. So all that's there. So then you'll just come back here and what are we looking for again? Here we go, real estate worksheet. Boom, so that's the real estate worksheet on a particular property. Oh, and the properties they already have. It's not the one I'm looking for though. Oh, no, this is the one I'm looking for. Property investor data worksheet. All right. So after they fill this out and submit that with the other required information, then they could actually come back to them with, what they need to do to get them moving forward on that actual deal. So speaking of real estate, let's look at the programs. We were able to kind of condense this into one sheet. When somebody wants to know about real estate, excuse me, about the real estate investing programs, and they're asking, okay, well, what kind of programs are you offering right now? Well, we have fix and flip, we have short-term rental, long-term rental, and bridge loans. Okay, and it shows you the terms of the loans, the minimum amounts of the loans, the minimum property value of the loans, the max loan amount, the loan to value, okay, ratios, minimum FICO score. Remember I told you some go down to 500, right? There you go. Property types, tell you exactly what type of property types, prepayment penalty, if there is one, depending on the different type of loan program, and also any termination fee. Okay, if they're trying to terminate a loan. So that's pretty cool because it shows you right there on one sheet. You know, I would recommend you probably having a few of these with you if you're going out, you know, to different events. You know, putting your website, your phone number, your name at the bottom, your email address. You can even change up there, you know, up there with your information if you're going to be competent enough to answer questions when people have them. So all that information is there. Lastly, we're going to take a look at this sheet. This is the preferred industry list. Okay, it's the updated preferred industry list. So it shows you under the green. Let me pull this up a little bit for you. Preferred industries. So all of these are, you know, great, right? If they're in these preferred industries, they really shouldn't have an issue if they're meeting the other requirements to get approved. If they're under the yellow, okay, that means enhanced underwriting. That means, okay, it may be a challenge getting them approved, not because they're not doing good business, but because of the economic climate right now, okay, with COVID-19 and everything else is going on. You know that they could potentially have an issue. It doesn't mean they're not going to get approved, but it's just under enhanced underwriting. That means they're going to look at it more closely. Third tier, under the red, is prohibited. All right. So you're looking at that list, and if you know people are in there, then hey, it's probably going to be an issue with them being able to get any type of funding. Okay. So, you know, that's something to consider. And again, it depends on the type of loan, because if somebody gets unsecured business funding, remember, they can use it for anything, right? Because everything is going to be based on the strength of their credit score. When we start talking about these industries, it's really going to be tied to particular loans, okay? So that's just important to understand, all right? All right, so with that being said, I believe those are all the documents I have to show you. I'm going to take the last, 15 minutes or so. I didn't want to be on here this long, but y'all know how they go. To answer any questions that you all may have, okay? So if you have questions and you're on NovaeLive.com, drop those in the Q&A box. There's a Q&A section on NovaeLive.com. Let me see if I can open this bad boy up on Facebook and see if I can see comments. So I'm going to start taking questions. Q&A section on NovaeLive.com. I'm going to start taking questions right now. All right. So Q&A section on NovaeLive.com. Drop your questions there, and I'll be able to see them, and I'll be able to address them. And on Facebook, just drop them in the comments. Hopefully these comments are coming in at the bottom. I know it's kind of weird how these comments come in sometimes. So any questions about the business funding program? Any questions? I don't know. I went over a lot of information. If y'all don't have any questions, I'm good with that, but if anybody has any questions? Any questions in regards to business funding? Maybe there's a little delay. Thank you for all the hard work. This is absolutely putting us ahead of the game. You're welcome, Demeter. Thank you for being a part of this amazing opportunity. All right. Thanks, Jamal. This is amazing. Appreciate that. Anybody have any questions? Okay, here's a question. Let's see. Will this be recorded and posted in Novae affiliate group? Yes, actually in the Novae affiliate group right now, Mr. Shields. And yes, as soon as I finish this, it'll still be there. But we're also going to be putting it on NovaeMoneyTraining.com as well. Okay. Tanette, The start up with the 700 score, what does the file need to consist of? Like, what if they have only AU trade lines? Okay, so if they have authorized user trade lines, but they're large trade lines and they have a good mix of other credit, they could potentially get higher approvals, okay? And it's great that you asked that question, Jeanette, because people believe just because they got above a 700 score, they could probably get as much as they want. No, there's all kind of different variables that go into what they're going to figure out that they're going to give you, okay? Banks have their different risk tolerances depending on what state you live in, you know, depending on what the economy looks like at the current time, depending on other elements that's in your credit report. Like we talked about utilization. You know, if your utilization is 30%, well, that's great because you're not over the threshold, but you're going to get less than somebody who has 10% utilization, okay? If you have a 750 credit score, but you only have credit lines up to 30,000, you're going to get less than somebody that might have a 725 credit score and has credit lines up to 150,000, okay? So there are several elements that go into it, but the things that you want to watch out for the most when we talk about unsecured business funding, okay, is the utilization. We talked about that. That's important. If they're over 30%, then that's going to be a problem. The next thing we need to think about is inquiries. Okay, if they have tons of inquiries on their credit, we're talking about more than 6 in the last year, that's going to decrease the amount of money that they can get. Now, obviously, if they get on our credit building program, we can help assist them with trying to get some of those inquiries off there. There's non-matching. There's something else I want to make sure I throw out there to educate you. When people try to remove inquiries, you only want to try to attack inquiries that are not connected to an approved account. Because if you try to get inquiries removed that's attached to an account that you currently have, what happens is that account could potentially be closed. Okay, so you only want to address non-matching inquiries. All right, so that means they're not matching anything that's not currently on your credit profile as a active account. All right, so they have more than 6 inquiries within a year. That's going to decrease the amount of money that you get with unsecured business funds. So we got utilization, we got inquiries. Also, we talked about your credit limits. The more credit limits you have, the higher amount you can get approved for. Because what they're going to look at is giving you a multiple between 1 to 5. Okay. So, for example, I said $2,000 in revolving credit. That's one of the thresholds on the 7 categories chart. So if you got $2,000, depending on how the rest of your credit profile looks like, they may approve you from $2,000 up to $10,000. Okay. Now, if you got over 800 credit score, I've seen them 10x it. All right, up to a max of 150,000. So if somebody applies, they got a robust credit profile. You can't have over 800 credit score without having a robust credit profile. A good mix of credit, never been late, great payment history, low utilization. You know, if you want to get an 800 credit score, you start developing that profile, and you want to keep your utilization between 3 to 7%. Okay, like I always tell y'all, I got probably about I'm not perfect. My credit score is probably like an 829, 830. It fluctuates between 820 something up, to 840, but it fluctuates, and sometimes even maybe 805. But it stays above 800. But my utilization is always less than 7%, and I have over $150,000 in revolving credit on my personal credit. Okay. But I keep that below probably 5% at all times. If I charge anything, I charge up stuff to get points, but I always pay it off. All right, so it's very important. Okay, so depending on where your credit score is and how robust your file is, that's also going to determine how much money you get approved for. So that's why you want to consistently build credit over time. Okay, so if you got a credit card right now, and let's say your limit is $1,000, you want to check with your credit card provider and see if if you know your credit score is over 700, see if they'll extend your limit. All right, see if they will extend your limit, increase your limit rather. Okay, and every 6 to 9 months, you want to call back and continue to do that, right? But you want to make sure they're not putting a hard inquiry on your credit. Because the more credit that you continue to get over time and you have credit cards that are $5,000 limit, $10,000 limit, $20,000 limit, $30,000 limit. That means when you go to other banks and get revolving credit, they're going to base what they should give you off of what another bank already did. And with the unsecured business funding, what our lenders do is they look at that, right? And with the banks, and they actually submit applications to be able to the 2 to 10x, whatever amount is your highest trade line. All right. So that's the way somebody who has above an 800 credit score, that has like a $20,000 limit, the utilization is low, they got a robust credit profile, they can get $150,000 in unsecured credit lines because of what their profile looks like. All right. Hopefully y'all learned a lot from what I just said, because the unsecured business funding is going to be the most popular offering we have, because most people that have a credit score above 700 and just getting started in business, that's the really only option they have outside of a personal loan. And it's always better to have that revolving credit, because you don't have to pay interest on something that you're not using. Like, it's better to have a line of credit or a credit card versus a loan if you're not utilizing the money right away. And also, even if they are utilizing the money right away, with the unsecured business funding, they're going to have in between 6 to 15 months and 0% interest. Okay. So hopefully that answered your question tonight. If it didn't, ask me something else again. Taisha, thanks for the training tonight. Very informative. I have a question about the funding, not about the funding, just in general. How do I stay updated on my clients? Okay. So you want to call in to support tomorrow. She had a question about staying updated on her clients' credit. So, no, Taisha, staying updated on your client's credit restoration process. So it's important to understand that when we take on clients, there's privacy concerns that clients could have, and we can't share their information with you. Okay. Now, if they choose to send emails to you or updates they get, that's fine. But by law, we can't share their progress with you. Now, what we can share with you is if they're supposed to submit their driver's license or utility bill and they didn't do that. We can let you know about that, obviously, because you can help us secure that information. Or if you want to know how they sent back any responses, well, we can tell you that. But, telling you what's been deleted, what their credit scores are, and things of that nature, we can't do that. Okay, because that's against the law. D, if someone has rental income but not flowing to a business account, but it's a specific account for rental, is that not able to be used as revenue? Well, no, what you'll do is you're going to fill out the real estate worksheet, and that's a little bit different in terms of, because with the real estate investment, that's a little bit different than general business funding, because all they want to do is just prove that, number one, you own the property, and number two, you're the one that's collecting the rents from that property. I mean, if it's a cash flow generating property already, you'll be able to show that, whether that's a personal bank account, business bank account. But one of the things you want to do if you have a business is stop operating that business as you as an individual, okay? Because that's not a business. I want y'all to understand it. Don't take this the wrong way. If you have a business, but you don't really have a business, that's a hustle. All right. So if you got a business, you need a business bank account. If you have a business, you need to be incorporated. You need to be an LLC. Okay. You need to be an S Corp, C Corp. You need to figure that thing out. You need to be registered with your Secretary of State. Okay. You need to have yourself a business phone number. You need to have yourself a virtual address if you can't afford a building somewhere or a suite. You have to structure yourself as a business if you're trying to be a business person. Now, if you just want to hustle and make some money on the side, that's cool too. But you got to make a decision on what you're trying to do. Because if you're trying to be a millionaire, the best thing you could do is set up that foundation early so it'll be easier to accomplish. Now, the thing that won't happen is you not setting yourself up the right way and accidentally becoming a millionaire. Because I can almost assure you, if you don't set yourself up the right way, and if you happen to get rich by a stroke of luck, you're going to happen to be back broke again. And I'm not saying that to wish you any ill will. I'm saying that because of all of my experience over the years of seeing people who slipped up and got rich, but didn't develop the minerals and the goods that it took to maintain it. So that's why it's important to handle the foundation. That's why it's important to make sure you work on your personal credit, not just so you can get a better score, but so you can develop the discipline to be able to do things necessary to succeed in other areas. That's why it's important for you to be able to develop a good business credit score and develop your business credibility, and to be able to work through the tiers and develop that business credit score that can stand alone. You say, well, Rico, I don't know if I need the business credit right now. Well, if you have a business, you need it. Not just for the score to get money for a loan for your business, like today or 6 months, but do you ever plan on doing anything with the business? Like, it's amazing to me how many people really plan on just being broke for the rest of their lives. Now, I want y'all to hear me, and I really want you to feel what I said. I didn't say that to insult anybody. What I did is I said that to be real and to wake you up to the fact that if you want to be rich, you got to start acting like it. If you're truly going to leave a financial legacy, you got to be able to get to a point where you are super intentional about making things happen. Because let me tell you something. That's how wealthy people are. Wealthy people are intentional about succeeding. They're intentional about teaching their kids certain things. They're intentional about taking vacations. They're intentional about their hobbies. They're intentional about their relationships. But one thing that a lot of us weren't taught was how to live with intention.
All right, ladies and gentlemen, what a way to end it, right? What a way to end it. I like what he said at the end. Wealthy people are intentional. Let me say that again. Let that sink in on what he said at the end, guys. Hopefully you took notes. All right, if you came on here late, that's the great thing about video. You can rewind this any time, and it has many times as you want to get the information. Okay. So my question to you is this: are you intentional about your business? Are you intentional about building wealth? Because guys, let me just reiterate what I always talk about when I do my videos. It's not just about making money in another opportunity. It's not about jumping from opportunity to opportunity to opportunity. That's not what it's all about, because that's easy to do. And to be honest with you, it's easy to make your first buck online. It's easy to make money online. But what most people are missing, and what most entrepreneurs online are not teaching you, is a master plan. Today, ladies and gentlemen, what you have just saw, what you've just witnessed, is something that can develop a master plan for you and your family, a wealth building plan for you to follow. All right. This getting up, you've heard it before, OPM, other people's money, using other people's money. That's what these big businesses do. Do you think Walmart, do you think McDonald's, do you think Starbucks use their own money to start their entities? Heck no. They did not. I can tell you that up front. They didn't use their own money. What about the Amazon CEO? These people understand using other people's money. These people understand the power of business credit on top of your personal credit. You need both. You need those to work synergistically together in order to build wealth. Okay? And that is what it's all about. So I'm going to go ahead and end it here. For those of you who want to get started, you want to start this journey and get your entrepreneurship dream going, feel free to reach out to me either on Facebook. Okay. Below all my videos, I always leave my toll-free number where you can call, where you can, get with me. You can also book a time on my website at prodigymarketingonline.com as well. I'm not hard to get a hold of, ladies and gentlemen. That's why I'm here. I'm here to help you, to catapult you into success. That's my job. Okay. So we have Kenzo. Kenzo is a trucker. This is perfect. So he went over information about how to get equipment loans, guys. for folks like Kenzo who are truckers. That's perfect. We have something for everybody, guys. No matter what you're doing. Okay. Lloyd, I have a business at LLC, but need directions on building business credit. We got you covered, Lloyd. So Lloyd, get with me, sir. Or we're friends on Facebook, Lloyd. So I'm going to message you. Kenzo, I believe we're friends on Facebook as well. If not, please add me, sir, so that I can get with you as well. But guys, again, hopefully you took notes. You understood the 7 criteria. Let me go ahead and bring it up again. Give me 1 second here. The 7 criteria. Let me share my screen briefly. Share. Here we go. All right, here we go right here. Okay. The 7 funding criteria or categories. And he went over this extensively. Okay. Extensively. Now, if you still have questions, and remember, he said, if you have questions, make sure you look over this first. And then again, if you came to this video at the end, please look at the look at the video over again. If you came at the beginning, you already know what's going on. Okay. But if you still have questions, you can come here and schedule a consultation, and one of our representatives will get with you, answer your questions regarding your goals. Okay. Keyword, your key phrase, your goals. Okay. Not mine, not no one else's, your goals. That's what it's all about. So guys, today it's all about being intentional. It's all about being intentional. How intentional are you in building wealth? Hopefully you're intentional like I am, because I'm going to put this information, I'm going to continue to put this information in front of you, in front of the masses, so to speak, so that other people will have a chance to understand, have a chance to start their dream, all right, to pursue their dream. And there's no better time. I repeat, there's no better time, guys, than right now during this pandemic that we're in right now. All right, this pandemic is really wreaking havoc in this country. There's a lot of uncertainty. People are losing their jobs. People are getting laid off. People are looking for a solution. And like I said before, my job is to give you solutions on top of solutions as much as possible. This is a start for many of you. Many of you don't have, many of you, you have a business, but you don't have the proper cash flow. Many of you have a dream to start a business, but you don't have the cash flow. You don't have the funding or the capital. That's where we come in at. So again, if you're on YouTube, I'm going to leave a link below for you guys to get some more information. Also, find me on Facebook, friend me. Let's talk. Let's get you started to start building your business credit and your personal credit as soon as possible. Okay. So guys, thanks for watching. Enjoy the rest of your day. Talk to you soon.